at the beginning of the year, there was a lot of excitement, a lot of optimism around just how big the Chinese recovery would be in the aftermath of COVID lockdowns. The idea being that there's lots of pent-up demand in China. And so consumers are going to be rushing to book airline tickets and take vacations and buy expensive handbags and cars, and everything was going to come roaring back. And even the fact that the central government, now that it had let go of its zero COVID policy, would start doing fiscal stimulus measures. So you would have both organic growth kicking into high gear, and you would have stimulus-driven growth even driving the numbers higher. Now, we were incredibly opposed to this idea. We thought this was wildly unrealistic, both because Chinese pent-up demand we didn't think would be unleashed as rapidly and would be as big, simply because of the fact that Chinese consumers tend to be typically very conservative anyway. China doesn't really have a history of consumer-driven growth driving any economic recovery after a downturn. And of course, very importantly, the property market, which was the biggest, really store of wealth, if you will, for Chinese families, and then a store of investment. Well, the property market had taken a massive hit over the last couple of years. Household wealth, household savings had been essentially decimated, especially at the upper echelons of society, which would be the drivers of any big consumer boom in China. So that was one aspect of our thesis. We said, look, pent-up demand is going to be there, but it'll take a while for it to begin to show up in the numbers, and it may really be very modest all year long. And of course, that's what we've seen. That's what has played out. Number two, we were very opposed to the idea that there was going to be a big stimulus. We said, no, China is not going to just unleash stimulus. They're going to wait to see what organic growth looks like. And then when needed, they will step up with stimulus measures here and there, which is exactly what you've seen play out as well. Now, what happened over the rest of the year, starting, I would say, about March through the late summer, early fall, is as the economic data did not match up with people's wildly optimistic expectations, you saw that the market consensus took a turn for the negative, almost 180-degree turn, from ebullience all the way to downright pessimism and a massive historic market sell-off that has taken place in China. Once again, we find ourselves to be counter-consensus, because now we are consistently telling folks, look, this is not a China collapse story. This is a unimpressive, lackluster recovery story. You're not about to have the Chinese economy just completely plummet. You are seeing sequential recovery throughout the course of the year. Q1 did look better than last Q4. Q2 looked better than Q1, and Q3 looked better than Q2. So property market is in trouble. We can talk about that. Manufacturing has held up a lot better than anybody expected. And consumer-driven growth, parts of it were very strong, but all around consumers have been cautious. So that's where the story has now landed in terms, when you look at it from the view of China Beige Book's proprietary large-scale data on the Chinese economy.